Speak to these stocks for a second in terms of what you think they represent for the larger market, Rupal.
I think, frankly, not much. It's limited to a handful of stocks, and I think it's an extremely isolated development. The stock market consists of thousands of stocks out there, so I think we're making much ado about not much.
But you have a larger thesis, I think, which may feed into what we're seeing here, which is that we could see a correction this year, a significant one.
I think so. I think, you're seeing a lot of signs of a market top. And frankly, this volatility that you described amongst retail investors, chasing up a few names and trying to, again, speculate, frankly, rather than invest is just symptomatic of what we see in the broader markets. The record flows into high yield, junk bond ETFs, the valuations of the market, issuance of SPACs, IPOs, all of these things, typically tend to be signs of a market top. So I think expectations need to reset with respect to a vaccine-led rally, that we've seen underway since November. And I think the second half looks much more vulnerable, although the first half we may still manage through.
It's always hard to call what would be the tipping point or the trigger for a correction. But given that you're talking about a significant one, I think a double-digit correction is what I saw. What do you imagine the tipping point would be that would force that to take place?
Well, it's what always matters to the stock markets, which is earnings expectations. I think that we are just too far ahead of ourselves on a wide slew of companies and sectors and geographies. In fact, this morning, you had a couple of profit warnings in Germany, from Fresenius Medical, a dialysis company. So I think we still have to work our way through COVID. And I think expectations for 2021 will have to get reset. That, I think, will cause the pullback.
Does that mean that you're telling investors they should be selling stocks now, getting into cash, waiting for this to shake out? Does that mean that you're recommending rotating into, I don't know, you tell me?
Well, no, one should not try to market time. I think that it's important to reposition a portfolio and to always stay, invested in the markets, but in the right areas of the market. I think stocks in the twilight zone, as I call them, are a very attractive opportunity here. These are companies that are not cheap enough to screen on value investor screens, but they're not growthy enough to entice growth investors. But they have perfectly good companies, with steady growth at reasonable multiples, just not heady growth at hefty multiples. And some of the big pharma names like Glaxo and Roche in the international markets are good examples of this. They're perfectly fine companies, just don't appeal to the two extremes of the market.
What about in the United States?
Slim pickings. I think international markets offer far more opportunity, both from a stock market standpoint, but also from a currency appreciation potential standpoint. While in the near term, the dollar decline may have been arrested, but I think in the medium to long term, the dollar looks pretty vulnerable. And that means you can make two ways. You can make money two ways by investing abroad, through the stock market appreciation because it's more undervalued, and currency appreciation, which I think in the next decade will probably be a source of greater returns, idiosyncratic returns, than people are expecting right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.